Welcome to our weekly Ask the Fund Manager series. The premise is simple. We put a fund manager on the spot and we ask them questions about current events and how these events impact on investment markets. We aim to keep it interesting and understandable and do this all in under 5 minutes. We hope you enjoy.
October has been a month full of political shake-ups, giving markets plenty to digest. Amidst all this uncertainty, gold has continued to be the standout performer, hitting all-time new highs in October. Today, I'm joined by Sunil. So Sunil, what have been those three key themes driving market sentiment in October?
So I'd probably pick out something from the US. We've got a government shutdown in the United States. Elsewhere, we do have some interesting market-relevant political stories in Japan and France. And then we probably also should touch on gold as well.
Of course. Let's start with the US, though. There's been a lot of focus on tariffs this year in terms of the narrative, but domestic politics has definitely taken center stage this month. What is the story of the US government currently?
So just a reminder, a government shutdown in the US is basically when they suspend all non-essential federal activities because the Congress has failed to pass legislation to approve the funding for the next year. The government shut down on October the 1st. That's the first time since 2018. It's already the second longest on record. The consequence is that over 750,000 federal workers are essentially not funded and therefore are on temporary furlough. There is an economic cost, of course. It's estimated to be about $15 billion a week. But there's also been a data blackout where investors are really not receiving reports like the US unemployment report or GDP. They're on freeze at the moment.
Right. And we've seen how much these key data points can really drive market sentiment. So what has been the impact of this market blackout?
Well, we've said this a lot this year. Markets have taken it in stride so far. If you look at the S&P 500, the stock market in the US, it's hit a new all-time high, 40th time this year, and a new high just this week. There is, I think, a source of risk, if you like, through the Federal Reserve, the central bank. They did cut rates by 0.25% yesterday, but the blackout does add uncertainty to the rate cutting cycle because they don't really know where the economy's at. And we have noticed that volatility in the bond market is creeping up.
Right, got it. That's theme one. So if we move on to theme two, which is looking at Japan and France, we've seen new PMs this month. Is there a common thread really tying together these changes?
There is. We've talked quite a lot about fiscal policy this year, and I think these events just show that fiscal policy is still on the agenda, even if France and Japan might look as though they're going in different directions. So if we start with France, had 5 prime ministers in 2 years now. The government is under pressure to tighten its budget. Net debt for the country at 121% of GDP is not imminent crisis, but it's high. There are therefore a lot of political debates about how do we address the deficit, how do we reduce spending, and the consequence of a failure to kind of make progress on that led the Prime Minister, Sébastien Lecornu, to resign for 4 days. Bond markets didn't like that. I think more just the ongoing uncertainty. So if you think about bond yields as a measure of high yields mean less confidence in the country's economic sustainability, seeing France's yield higher than Italy's for the first time since the 1990s was a bit of a surprise.
Yeah, so quite clearly unprecedented shifts within France. How has this translated over in Japan?
Well, again, new Prime Minister Sanae Takaichi, but there the debate is about more stimulus. She has been an advocate. It was part of her policy platform, and she's announced that she wants to take through a package of 14 trillion yen. Sounds like a lot of money. It actually is. It's about $92 billion. That's been good for investor confidence. The Japanese stock market's up nearly 6% this month. But it's a coalition government, so it's still fragile. And so we're not quite sure how much of that will be delivered in practice.
Okay, so clearly 2 different budget paths in these 2 countries. Let's wrap up with our third theme, which is gold. So we had a slight correction last week, but it remains up over 50% year to date. We touched on this in last week's episode, but really, what are these key drivers, just to summarize?
So 3 key points. Firstly, concerns over the wider financial system both drive volatility in other assets, but they also just drive uncertainty. And we know that that uncertainty is pretty good news for gold. So if you think about expectations of lower interest rates on your cash, some weakness in established countries like the US dollar and those ongoing fiscal concerns, gold's been a popular choice. Second point is not just for private sector investors. So if you look at central banks who hold large amounts of reserves in other currencies or other commodities, they are trying to diversify, particularly away from the US dollar, feel a little bit overexposed there. So gold share in central banks has been increasing for a long time. I mean, over a decade, it's probably doubled. Very strong demand from big countries like China and India. And then lastly, retail investors want in on the action. We now have easier ways for investors to access gold. So ETFs would be a good example. ETFs in gold have seen $26 billion in inflows in Q3. Now, I'd have to say that's a bit of a concern for us because it can be a sign of froth and that demand can be quite volatile.
Noted. Snappy recap of last week's episode, Sunil. Thank you. Thanks for the insights. Before we wrap up, as always, we have our market stat of the month. NVIDIA is back in the headlines, making history as the first company to cross over $5 trillion in value. To put that into context, NVIDIA is now worth more than the GDP of every single country bar the US and China. So really impressive run for the tech company. Thanks all for joining us this week, and join us again next week when we're back with a new theme that's really caught our interest.
Thank you for listening. We hope you enjoyed this episode and we hope you listen in again next week. Also, we love to get feedback and ideas for future episodes. You can use the link provided below to share your thoughts. Before you go, just some important information to be aware of. Unless otherwise stated, any opinions expressed are those of Aviva Investors. You should not be viewing this as an indication of any guarantee of return from an investment managed by Aviva Investors, nor as personal advice of any nature. Information contained herein has been obtained from sources believed to be reliable, but have not been independently verified by Aviva Investors and is not guaranteed to be accurate. Past performance is not a guide to the future. This material is not a recommendation to sell or purchase any investment. The value of any investment and any income from it may go up as well as down, and the investor may not get back the original amount invested. Nothing in this material, including any reference to specific securities, asset classes, and financial markets, is intended to or should be considered as advice or recommendations of any nature.